This is a special podcast presentation from 700WLW.com. This is Casey Boland on Demand.
Speaking now with Casey Boland of Hengold Capital Management. And Casey, last year wasn't the greatest year on record for stocks, and looks like today could be a rocky day, at least off to a rocky start. And you have to look at the whole idea of rebalancing your portfolio from time to time. When's a good time, and how often is it a good time?
Well, I think it really depends on the parameters of your portfolio. I think some people look and say, I'm going to look at this once a year, once every 2 years or so, and realize, do I need to rebalance my portfolio? I think it needs to be dictated more by movements in the market. You know, last year with stocks really not doing much, at least here in the U.S., a lot of people may think, well, I don't really need to look to rebalance my portfolio. Let's say I'm targeting 70% stocks, but within those 70% stocks, you have to look at the makeup, because last year foreign stocks greatly underperform U.S. stocks. So within the mix, you may need to look to increase your foreign exposure, because now it may be a smaller percentage compared to what your target allocation is.
Well, and then hoping that foreign markets turn around.
That's right, because right now, foreign today is having a very, very difficult day, and U.S. stocks are likely to follow. But, we look at the next 3 to 5 years, some of the best valuations are overseas versus the U.S., so the expectation is returns should be better. Now, will that come in the near term? I don't know. But at the same time, I think a lot of people tend to look at their portfolios and say, if something's not performing well, I don't want to hold that. But longer term, that oftentimes really burns you, because you tend to sell things that have not performed well, and oftentimes those are the first to recover.
If you're somebody who's, getting closer to retirement, so you're in some maybe more conservative investments, you don't want to take any risk. I mean, if you're going to rebalance, what are you looking at doing?
Well, in that case, for retirees, as you're getting close to retirement, you want to make sure that you continue to hold bonds in the portfolio. Now, bonds didn't perform very much as well last year, but their stability, they reduced volatility in the portfolio. I know in recent years when the stock market had been doing well, a lot of people said, well, why do I want to have bonds? But as you're approaching retirement, you can't afford to have big losses or big drawdowns. One key thing, just like an emergency reserve, have an emergency reserve in retirement. Make sure you have assets that you can draw from for the next couple years should the market drop. That way you're spending something that's safe and secure.